joining the show. Good morning. Let's start with Nvidia, since we were just talking about that one. John was talking about the potential for some further pullback. It's down about 5% this week, but ultimately thinks that at least in the nearer term, it can continue to run higher. How would you trade a name like Nvidia, given this pullback that we've seen, but also given the huge year-to-date performance that we've also seen?
Yeah, I think traders are taking some opportunities and taking some profits, of course, post earnings. And you mentioned it's down 5% for the week. But if you look technically, the stock seems to be respecting the 130 area, which actually goes back to the October 30 levels. And that also, by the way, corresponds to the 50-period moving average. So what I'm going to do in this case is I'm going to play sort of a rebound trade, potentially back up to the 140 to 145 area for Nvidia. And this may be near term as we move after the Thanksgiving week, where we know that volumes are relatively light. So what I'm going to do in this case, I'm going to place a defined risk and defined reward trade, so we know exactly what our outlays are. But I'm going to buy the January 135, 140 call vertical. And earlier today, you could have bought that for about $2 a share in debit, or $200 a contract. So in essence, I'm looking for a hold of that October 30 low, which again corresponds to the 50-period moving average. If you do structure this trade, your risk is $2 a share, but your reward could potentially be $3 a share. And your break even on this position is $137 by expiration in 51 days. And your max profit of $3 would be achieved if the stock hits 140 or higher by expiration, like I said, in 51 days. So essentially, it's a bullish trade, but we're defining our risk, which is $2 a share, but also defining our reward, $3 a share at 140 or higher.
For investors in Nvidia, the last 2 years have been an endless roller coaster. At the beginning of 2023, the company's market value was only $359 billion. Its value has already skyrocketed to almost $3.35 trillion. More than 9 times its previous worth in less than 2 years. The company's graphics processing units, GPUs, which swiftly rose to prominence as the industry standard for enabling artificial intelligence, AI, are responsible for the parabolic shift. Since the beginning of 2023, this has contributed to a 480% increase in revenue and a 1,270% increase in net income. Although investors shouldn't anticipate sustained growth of that size, there is ample indication that Nvidia has a lot of work ahead of it. Many of the largest computer businesses in the world are still making significant investments to modernize their infrastructure in order to meet the demands of artificial intelligence. For the majority of them, this entails stockpiling Nvidia's cutting-edge processors. Aside from the evident secular tailwinds, investors might be missing an important factor that could portend a significant move for Nvidia in 2025. Revenue during the third quarter of Nvidia's fiscal 2025 increased 94% year-over-year to $35.1 billion, while adjusted earnings per share, EPS, increased 103% to $0.81. The outcome's far above the 79% revenue growth that management had predicted. The management made it apparent what drove the outstanding performance. According to CEO Jensen Huang, the world is moving toward Nvidia computing as the AI era picks up speed. According to the findings, Nvidia's data center business, which climbed 112% year-over-year to $30.8 billion, continues to have robust demand, which drove the top-line move. The company's Hopper architecture, which serves as the basis for its H200 Tensor Core GPU and GH200 Grace Hopper superchip, and powers many data centers and AI infrastructure worldwide, accounted for a large portion of that income. The next generation of Nvidia's AI-centric chips, the Blackwell architecture, is set to replace these processors despite the fact that they are now the industry standard. In its fiscal 2025 fourth quarter, which concludes in late January, the business has been aiming to increase manufacturing of the Blackwell processors and has previously stated that it anticipates shipping several $1 billion worth of these chips. Big tech businesses are vying to be among the first to obtain these next-generation AI-centric chips, and Nvidia has made no secret of the strong demand. Huang claimed in a CNBC interview that the demand for Blackwell was uncontrollable. He went on to say that everyone aspires to have the most and to be the first. With everyone vying for these chips, supply is now exceeding demand, and it will take several quarters before the situation is rectified. So what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
Casey, welcome. So, how much sway is Elon Musk going to have here? He likes to move stuff back and forth, both within China and between the U.S. and China, I guess.
Let's put Musk aside for a minute. But the conversations around tariffs are interesting. Trump, there's already been a lot of stuff during Trump 1.0 around tariffs and other things on semiconductors from China. Looked like over the weekend he may be planning to add Mexico and Canada to the mix. And I've said this before, like the U.S. actually does import a fairly sizable amount of semiconductors, but not from these countries. Mexico and China, it's a couple of $1 billion worth of raw semiconductors every year in the context of a $500 billion kind of industry. Canada's a few $100 billion. It just doesn't really matter that much. Most semiconductors travel between at least China and the U.S. inside other things. So clearly there are indirect potential impacts. If you're raising the price of PCs and smartphones and cars and impacting end demand, that can certainly have an effect. And clearly tariffs and other things have moved supply chains around. And so those are sort of indirect or secondary effects there can be on tariffs on semis. But direct tariffs on these countries on semis, just not that much of a direct impact. It's just not enough volume to really matter one way or the other. But people also forget, there's already a 50% tariff on semis from China.
Yeah.
Hasn't really impacted anything, right?
But even outside of tariffs, there's been this dance for several years now, not just the Biden administration, Trump too, I think, around exactly how sophisticated an AI chip can you sell into China? And, Nvidia will redesign and then they'll clamp down on that one, et cetera, et cetera. Do you expect the Trump administration the second Trump administration to get more aggressive about that? What can you tell from how Trump 1.0 handled it and how Biden handled it? Was it pretty much just the same, or should we expect some kind of shift?
And by the way, we may see some incremental, but this is export controls we're talking about now, not tariffs. So this is not allowing U.S. companies to ship certain products to China.
Right.
And it's been primarily AI chips and as well as some semiconductor capital equipment tools. And I would say like the original like Trump actions on this were not that effective. They were pretty leaky. Most of them went after Huawei and others, and they were very easy to work around. I would say the Biden restrictions have actually been more effective, much more surgical. So they were really targeted at very specific things, and they put very sort of strict thresholds, and they actually did impact things more. And again, the companies themselves were able to work around, and last year the Biden administration made those thresholds tighter that further restricted what could be sold. And we're still waiting to see if we may see more. Now, what Trump might do, I don't know. Like he could do anything. Like he's Donald Trump, right?
Well, but
We are racing to scale supply to meet the incredible demand, stated Colette Kress, Chief Financial Officer, during the results call. The demand for Blackwell is enormous. In her written statement, she added that both Hopper and Blackwell systems have particular supply constraints, and that it is expected that demand for Blackwell systems will exceed supply for many quarters in fiscal 2026. For background, Nvidia's fiscal year 2026 begins in late January. The ensuing pent-up demand may serve as a boost to Nvidia's revenues in the upcoming year. I'm not alone in thinking that. According to Beth Kindig, CEO and Chief Tech Analyst of the I/O Fund, Blackwell processor sales will surpass those of Nvidia's GPUs for 2023 and 2024 combined in 2025. According to Kindig, the company's unrestrained pricing power may propel its data center division to at least 50% growth in the upcoming year. In 2025, the stock might rise by up to 70% as a result. As Nvidia collaborates with its suppliers to enhance manufacturing, the competition to make its flagship processor more widely available is underway, As the supply of these next-gen processors increases, so too will the company's revenue, since greater production implies more chips available to sell. As a result, already strong profits will be boosted, which will raise the stock price. To be clear, Nvidia has a stake in removing the bottleneck as soon as possible, but we are unsure of when the supply limits will be lifted. We should anticipate a steady rise in the supply of these high-end chips, which will serve as the impetus for increasing Blackwell sales as the year goes on, as management has always been cautious with its projections. Some investors have accepted that Nvidia's growth has already reached its zenith. That perspective, in my opinion, is immature and offers a chance for wise investors with a longer-term perspective. Its high price has already started to decline. According to Wall Street, the corporation will only produce 31 times the sales of the previous year in fiscal 2026, or an EPS of $4.41. According to the evidence, Nvidia's best-of-breed Blackwell AI processors will become more readily available at some point in 2025, which will boost sales. This, in my opinion, will be the spark that ignites the stock price and sends it skyrocketing in 2025. Investors in Nvidia have had an incredible 2 years, as the company's stock has increased by 736% since it became clear that the graphics card manufacturer will be instrumental in the spread of artificial intelligence, AI. Because of its monopolistic position in the AI chip market, Nvidia's sales and earnings grew rapidly over this time, which justifies its exceptional returns. The good news is that based on management's remarks during the company's most recent earnings conference call, Nvidia is capable of maintaining its incredible surge for the next 3 years as well. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Getting to, and I think you're answering this, is that actually the Biden administration was a bit tighter on the export restrictions than the first Trump administration was.
They were less leaky. They were harder to work around, and they put the onus more on the semi companies themselves rather than they were just trying to like restrict Huawei, for example. They put very clear restrictions on. You can't ship AI chips that have a performance above a certain threshold or a memory bandwidth above a certain threshold. They said you cannot ship semiconductor manufacturing tools that can make products that are like more advanced than X or Y, depending on what it is. So they were sort of a more specific limits. And again, they did further tighten them as we went along, because it's always possible to work around this stuff. Nothing is airtight. But I would say that the Biden restrictions were more effective, clearly, than what Trump 1.0 put in place. And we'll see if Trump 2.0 takes any lessons from that. But I can't imagine that things are going to get easier. So if best case, they'll probably stay where they are. And my guess is things probably will get tighter. And that may even happen before Trump takes office.
Why do you say that? I mean, even before Trump takes office, that's not long.
Well, we're waiting. We're actually waiting right now on potential further extensions to the export controls on things like AI chips and semi-cap equipment. There was some news flow recently that suggested that the government may be looking for, I think it was up to 200 additional Chinese companies to maybe put on the restriction on what's called the entity list to prevent sales to those companies. You have to remember, a lot of the companies that have been buying stuff, within the confines of the controls, they may potentially be viewed as things like Huawei proxies, right? These are companies that are kind of new, that have sort of grown up in the wake of these sanctions, and it is entirely possible that we may see further tightening of this, actually, like in the relatively near future, even before the inauguration in January happens.
Let's examine the reasons why investors in Nvidia can anticipate further growth from this eminent semiconductor firm. Nvidia announced record revenue of $35.1 billion in its fiscal 2025 third quarter results on November 20. The primary driver of the company's 94% annual growth in top line was the 112% increase in data center revenue to $30.8 billion. Nvidia's fast manufacturing ramp of its next-generation Blackwell processors allowed it to easily surpass its initial fiscal T3 sales projection of $32.5 billion. The company is rushing to grow supplies because of the huge demand for their Blackwell AI chips. It is easy to understand why Blackwell has so strong demand. According to recent testing, Nvidia's most recent AI processors can outperform the previous generation of Hopper chips by a factor of 2.2. Additionally, this amazing speed boost is coupled by a decrease in computing expenses. According to CFO Colette Kress, 64 Blackwell GPUs are needed to run the GPT-3 benchmark, which is 4 times less expensive than 256 H100s. Therefore, despite the short-term margin damage, Nvidia is doing the right thing by boosting the output of its Blackwell processors. In the current quarter, the firm anticipates its non-GAAP gross margin to be 73.5%, a decrease from the reading of 76.7% from the same period last year. Kress notes that after the Blackwell processor's production completely ramps up, Nvidia's gross margin will return to the mid-70s range. Nvidia's 2025 GPU sales forecast was recently increased by 10% to 30 million units by Japanese investment bank Mizuho, which cited the growing demand for these chips in AI, data centers, and gaming. This explains why Nvidia is currently expected to grow strongly in fiscal years 2025 and 2026, according to consensus predictions. The technological edge that Nvidia has over competitors is a major factor in the company's remarkable hold on the GPU industry. With the majority of the AI processor market, Nvidia has left rivals behind, while AMD and others have been lagging behind. The good news is that Nvidia may be able to maintain its leadership in this profitable market thanks to its ambitious product roadmap. For example, in the first part of 2026, chips based on the Rubin architecture will replace Nvidia's Blackwell processors. According to analysts, Taiwan Semiconductor Manufacturing's 3nm (nm) production node would be used by Nvidia to produce the Rubin chips. That would be better than the 4np process node from Blackwell, which is a better version of the 5nm process from TSMC. Nvidia can fit more transistors into a smaller space with a smaller process node, which should increase processing power and lower power usage eventually. Therefore, it won't be shocking to see Rubin assist Nvidia in preserving both its great price power and its technological edge over competitors in the AI chip market. Nvidia's domination of the AI chip market is anticipated to result in strong top and bottom line growth, as AMD projects that the market will produce an astounding $500 billion in sales by 2028. This explains why, as was previously observed, analysts have increased their growth projections for the company for the current and upcoming fiscal years. Fiscal 2027 has a similar pattern. According to the above chart, experts anticipate that Nvidia will report earnings of $5.55 per share in fiscal 2027. In a few years, the company's stock price might reach $226 if it is trading at 40.8 times earnings at that point. Compared to current levels, that would represent a 67% increase. Investors can purchase Nvidia's AI stock at a favorable price at the moment because it is currently trading at 36 times forward earnings. Therefore, they might not want to pass up this chance since, should the market choose to reward the company's impressive growth with a higher multiple, it could yield larger rewards. As always, sharing your thoughts and insights in the comments section can foster a more informed community discussion, helping everyone navigate the complexities of investing in this dynamic sector. Stay ahead of the game with the latest stock market news, data, and important updates. I share valuable insights and real-time information on my Telegram channel, ensuring you're always informed before everyone else. If you want to keep up with the fast-paced world of investing, open the description below, click the link to my Telegram channel, and join our growing community.